everyone, this is Bhutani with Remax Excellence.
Hello everyone, this is Sid and I'm a mortgage specialist with Mortgage Alliance.
So as we are all aware, there has been some changes posted by CMHC. In fact, they will be in place July 1st onwards. And we really wanted to do this quick video so we can get a good understanding of what these changes would really mean for our buyers and what kind of an impact it will have on the marketplace. So there has been some changes, and Sid will talk more about what really CMHC has brought upon for changes. And yeah, let's talk more about it, Sid.
Right guys, so as of 1st of July 2020, CMHC is making 3 important changes to the guidelines. And believe me, all these 3 changes are extremely important for us to understand. The first one is that if you're a family of 2 or a family of 3 who are looking to purchase their home, CMHC wants to make sure that at least one of you has a minimum beacon score of 680. So once again, I would like to say maintaining and improving your credit score is the key, guys. If you need any help about that, or if you have any questions, you're always welcome to call me. The second guideline that they have changed is they're limiting the debt ratios. Now, we need to understand what a debt ratio is. So if you're a family of 2 and your family annual income is $100,000, CMHC used to allow you to use up to 44% of it, which in this case is $44,000 every year towards paying off all your debt. And they wanted you to have the remaining 56% for yourself. They have changed this rule. Now they are only going to allow you 42%, which means $42,000 out of the $100,000 to pay all your debt, which would include your property taxes, your mortgage payments, your heating bills, and your credit card debt, car loans, student loans, everything together. You cannot exceed that $42,000 now if your family income is $100,000. Third important change they have made now is that they're not allowing any borrowed down payments.
So what does that really mean, Sid, with borrowed down payments for our viewers, right? Until now, in fact, as we speak right now, we still have the borrowed down payments allowed by CMHC. So if you can shed some more light on it and give us some more information as to what all would come under a borrowed down payment.
You're absolutely right. So up till now, CMHC was allowing us to use borrowed down payments. That means we could have borrowed the first 5% that we need, either from a line of credit, a credit card, a family member, whatever, and still be able to buy a home. But now CMHC wants you to come up with the first 5% down payment from your own savings.
Right. So what happens if, say, for example, if a buyer is making 5% down payment by himself on their own, if they have some savings, but they still want to top it up with some gifted down payments from their family, from their parents, and the reason they would do that is just so they can lower down their monthly payments. Would that still be allowed, Sid?
That's a good question, Tushar. So yes, that is allowed. The only thing is the first 5% from your own savings, and your family members can gift you the remaining portion of the down payment, be it 5%, 10%, or whatever amount.
Okay, good to know. So with all these changes that are coming in place effective July 1st, we've done some number crunching, we've done some calculations, and I was working on, say, an example this morning. So if there is a family with an annual income of $100,000 with 10% down, typically they would be pre-qualified for about $525,000. Now, effective July 1st, with these new rules that have come in place, with the changes that Sid just talked about, you would be down, the same family with that pre-approval of 525 would be down to about $463,000. Now, Sid, if you do some math here, that's a reduction of 12%. That's quite a bit, though.
Exactly, that's quite a bit.
Yeah.
And that actually is making me believe, or maybe you will be able to answer this question for me, is do you think row housings or smaller houses like duplexes, single family detached houses is where the demand is actually going to move?
Certainly. I mean, I would say even right now, if I have a client with me and I sit down with them to kind of start working on their pre-approval, of course, when you work with your clients as well, we kind of go through what their max limit will be. And I've seen people, like if their pre-approval is about 450, they might not go all the way to 450. They would settle down for about 420, 430 right? Or maybe 400.
Yeah, it's
They all
never a
wanna-
good idea
yeah.
to stretch and
All
go to
go
the
all the
maximum
way,
allowance.
right? So I don't think it will have a big impact on our smaller housing product like duplexes, townhomes, row housing. But definitely say that I strongly believe that homes that are priced at more than 500, 550, 600, we might see a bit of an impact there because it was a challenge itself, even right now, to be able to get buyers qualified for that amount. And with these new rules that are in place now, it is only going to get tougher. So yes, yeah, that's what my views are on it.
Perfect. No, I think that's a good answer.
And yeah, so I mean, based on the research that we've done so far, CMHC has said that this measure that they've taken will help curtail excessive demand and unsustainable house price growth. Now, this is more for markets like Ontario and BC. In Edmonton, as we all know, since 2015, 2016, we have been in a recession for the longest period of time, and it is not surely for our market here. We haven't seen that excessive demand. So we are still doing okay. We are trying to sustain, and I don't think we'll have much of an impact. The 9 to 18% price drop that CMHC has talked about as of last evening, it is more for markets, as I said, in BC and Ontario. So we won't have that much of an effect. So there's no reason to worry about. And but yes, if you are out in the market looking for a place, this month could be it. Going forward, starting July 1st, things are only going to get tougher. So you might as well make a decision right now instead of delaying it for further.
And Tushar, I think we should also be doing a small video on how we can help people qualify for more.
Yes.
And maybe the next video we should focus on that. So guys,
Yeah.
We will try and bring out the best information for you in our next video. But from what we discussed today, if you guys have any questions, please feel free to give us a call. Our numbers are displayed on the screen below, and we will be waiting to hear from you.
Yes, last couple of days have been really tough for all of us in the sense that we've been getting calls from our clients wanting to know exactly how it will really impact their home buying power and the whole process. So we have given information out, and that's the reason we wanted to really do this video right away, so we can pass on some information to our clients so they are well prepared before making an informed decision. If you have any more questions, you have Sid's number, you have my number as well, please give us a call. We'll be more than happy to answer any of your questions. And yeah, so thank you so much.
Thank you guys. Thank you for watching this video. Have a good day.
Perfect. Have a great day.